You spot a pattern, you click buy, and almost instantly, the market crashes in the exact opposite direction. When that happens over and over, the charts start to look like a chaotic guessing game. It can feel as though the market is specifically hunting your position. In reality, price action is part of a highly orchestrated environment, directed by global financial institutions executing coordinated orders. This system is controlled by volume. Decades ago, that high volume activity was generated right here on the trading floors, where dense crowds of brokers shouted out significant block orders on behalf of the world's biggest banks. Today, that physical crowd is gone. It has been replaced by digital algorithms housed inside these heavyweight financial hubs. Every single day, they quietly move billions of dollars across the globe in milliseconds. Because these institutions move such substantial amounts of capital, they cannot slip in and out of the market unnoticed. Their presence leaves visible footprints right on the chart. We call these footprints supply and demand. Let's start with the buying footprint, known as a demand zone. This is the exact price level where a major bank decides to step in and inject significant pools of capital to purchase an asset. Look at this chart. Price drifts downward quietly, then explodes upward with powerful green candles. To find where that massive money entered, we highlight the final downward candle before the explosion. This demand zone marks where institutional buying pressure originated. By isolating this starting candle, the foundation or base of the move, you eliminate the need to guess where the market might turn. You are looking at the exact coordinates where buyers mathematically overpowered sellers. The exact same logic applies when institutions want to sell. They create a footprint called a supply zone. This is the ceiling where high-volume players dump orders to secure their profits or bet against the market. On this new chart, price climbs steadily, then crashes downward through a wall of aggressive red candles. Tracing that drop back, we wrap a rectangle around the very last upward candle at the peak. This supply zone represents overwhelming selling pressure. Supply and demand are identical mechanics, operating in reverse. They are pure, visible imbalances in the flow of money. To track these footprints accurately, there is one rule you must follow. Always look for the explosive price movement first, not the quiet candles. On the left, a violent, explosive departure requires institutional money. On the right, small, choppy steps are just retail noise. Find the explosion, then locate the single opposite-colored candle at its base. That exact candle is your zone. Drawing these zones with absolute precision separates a retail trader relying on hope from a professional tracking real data. Professionals never chase the explosive move after it happens. They understand that institutional orders are often so large that they cannot be filled all at once without spiking the price too far. This means banks often leave resting orders behind at the original entry point, waiting for the price to return. Here on this gold chart, we've mapped a glowing green demand zone. Now we wait as the price slowly bleeds back toward our footprint. The moment price touches our zone, it triggers resting buy orders, launching the asset higher. To ensure the strategy makes mathematical sense, we strictly manage our risk. We place a very tight stop loss just below our zone and target a profit twice the size of our risk, locking in a 1-to-2 ratio. Footprint detection points you in the right direction, but strict mathematical risk control ensures you survive long enough to profit from it. The global market is a structured ecosystem, driven directly by the actions of central banks and heavyweight players. When a global giant, like a central bank, needs to move capital, they must physically shift the market. Your job boils down to 3 mechanical steps. Spot the explosive move, carefully draw your zone around the origin candle, and patiently wait for the price to return. By learning to read supply and demand, you strip away the chaos. You start seeing the market exactly as it is, giving you the clarity to trade alongside the giants.